Hello. Thank you for visiting us today. Volume okay? Yeah? Okay. Okay. Real good. Why don't we start off the meeting with the Pledge of Allegiance? I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with justice for all. One of the things about, I believe this is the third time I've held this meeting. Sorry for not being here last month. We had a little rally that was taking place. And I was out dealing with the police at 7:30 in the morning, along with my wife was with me. We were setting up tables to distribute signs, and we came here very briefly, left some signs here, and I was so pleased to see how many members brought signs from here to the rally. In addition to that, we have to drop off 190 signs. 190 signs were built in my wife's living room that we had available for anybody to use. And we got back, I think 189 of those. Okay? And what happened is that with Democrats, you can trust. They will return things. That's the one sign that was missing, really wasn't missing. It was by a college student who wanted to take the sign and re-engineer it and build it at their school. So anyway, some of the things that came across today. One is that I have a donation here of a book, and it's by Hakeem Jeffries, and anybody can have this. And it looks like it's oriented towards somebody in 5th grade. So if you have a grandchild or a friend or relative, it's about the ABCs of democracy, and he actually signed it. So I'm going to leave it here in the front. Thank you very much for bringing that in. The other item that came up is that we're faced with a felony situation on our hands. No, we're not talking about Donald Trump. But we're talking about somebody had completed a Medicaid application. They had signed it, put it in an envelope, and they left the envelope on the table that was just all we're at. Okay? According to state law, that we cannot touch it. All right? Whoever filled it out, if they can grab that and take it and mail it to LV, we won't wind up with a felony. My question was, what if nobody picks it up and at the end of the day we have to clean up this building? Oh, it stays there permanently, I guess. So anyway, with that in mind, we're going to roll on to the what's going on, a quick update on economics. And the reason why I cover economics is that it was the number one thing that made the decision between Harris and Trump on the exit polls. It was people's decision about economics. And that's the reason I cover it. Okay? And it's odd. One of my major campaigns was back in '92. And I remember a guy named Bill Clinton, and they had a saying, something about it's the economy blank. Okay? What was going on back then is still going on today. So that's the reason for bringing it up. What I have is I'm going to be covering some very basic slides very quickly. This is the weekly unemployment filings that take place. And you can see when Trump came into office, it was relatively on the lower side here, 230 range. Then it spikes, and it's drifted down a little bit since then. But the whole point, it's at a much higher level than it was under Biden. Under Biden, and we see the dashed line, that's what had prevailed for the entire fourth quarter of 24. Okay, so when you hear about jobs, go to this slide. We will have this on our website. Okay, so you can actually share it with friends, you can email it, you can use it as attachments, you can put it on Facebook. It's a JPEG. Next slide, please. This is inflation. Inflation is a 12-month rolling average. So as each month comes in, the oldest month falls off. So think of it as dominoes, okay? So the question is, the oldest domino is over on the far left. See like the negative one? Can I see a show of heads? Thank you. That one falls off on the 15th. This coming Tuesday, I believe it is. All right? And it's a negative number that falls out of the other ones. We're probably going to get something around a 2. That's what it's been averaging, about a 0.2 on a monthly. So what's happening is a 0.2 comes on and the negative falls off, which means inflation, the annual rate, when you add all 12 months, it's going to go up. That's not good for Trump. We're going to be looking at inflation around 2.7. And why is that important? The Federal Reserve, which sets interest rates in mortgages, they're going to have a tough time explaining, if they want to move interest rates down, they're going to have a tough time explaining, well, wait a minute, inflation is going up. So that's the key part of it. So what you always want to look for is the oldest domino, the one on the left, as it falls off. Is it a big one or a little one? In this case, it's an actual minus. You don't get much lower than that. So, anyway, just a heads up. Next slide, please. Gasoline prices. We're able to get this on a weekly basis. This comes from the Department of Energy. And the bottom line is, remember how Trump promised that he's going to get after prices, lower it down, make inflation easier on the consumer and the American public? Well, this is what's actually going on. This is real life data, okay? Once again, it gives you information by which to communicate. You can take this same thing and you can blow it up onto a handheld site just to remind people at a rally about what the promises were and promises not kept. Next slide, please. What we embarked on over a year ago for the club is that we go out and we survey the 4 grocery stores around here. So Publix, TVDC, Walmart, and Target. And what we did is we identified roughly about 30 different consumer items that are on the shelves there. We wanted to make it relatable. So instead of talking about national stats, what's going on in our backyard in the villages with regards to food costs. On a month, so that's the items on the right-hand side. On the left-hand side are 8 items that I go around every month, at the end of the month, and grab those numbers. Okay. Because we want to be able to get it on a monthly basis to see progress-wise. Because if somebody says they're going to be reducing prices, here's your scorecard, here's your grade, if you will, that we can track on a monthly basis. Next slide, please. So this is one of the 8 items, eggs. What's going on with eggs? As you can see, the name of the store is on the bottom. So it starts off with Target, Walmart, Winn-Dixie, and then Publix. And when you look at the blue lines, those are the most recent month. Okay, this is like about 2 weeks, about a week old now. And this is the prices that are prevailing for a dozen eggs, medium grade. I got all that detailed out. But anyway, we'll make sure that we compare the exact same product from 1 month to another month, and that same product is found in all 4 stores in order to have comparability. So this both gives you trends within the store, and then you can compare pricing between the stores. Okay? And the key part of it is, you see how it looks like in April, the pink line, how much higher that bar is? And it has been going down, all right? But is that due to Trump, or is that due to the egg industry as it starts to dig its way out, if you will, of the avian flu? Let's go to the next slide. So when Trump says, woo, egg prices are down, well, let's look at it over a longer time period. What's going on there? You see the very far right? That's where we're at, okay? And we're off the peak from the avian flu. But notice how we've also have had 2 peaks of the avian flu. We're recovering, if you will, that after they culled the number of birds, killed chickens, egg-laying chickens, it takes a while to replenish those chickens to get them back up to get them back into production. Okay, so what's going on is that more eggs are now being laid by the chickens that do not have this flu. The flu is incredibly contagious. Got a bunch of research on it. It's not a good situation for anybody, including the egg manufacturers or suppliers of it. And yes, egg prices have gone down, but over the far right, look how it is compared to history-wise. It's still at elevated levels. So when you hear Trump talk, he'll talk about what took place for March and say, woohoo, look how it's come down. But stop, take a look and see where it stands historically-wise. Okay, it's not remotely close to where it has been. And again, this is how you can use information to convey factually to other folks. You may not be able to change a MAGA, I get that. But who this does make a difference to is your friends, relatives, people on Facebook. to be able to pass along that this is information that is the best we have, and it's pretty factual. Okay, next slide, please. This is lettuce. Why did we pick lettuce? Because we knew with immigration and ICE, they were going to go after the fields. Okay, California in particular, Salinas Valley. All right, and what's happened? That's exactly what's happened. I've seen the news clips that are going on out there. The fields being raided. So what we know is that we figured, okay, when the production slows down or stops, what's going to happen to prices and availability at the stores? Now, you've got a certain seasonal component to it, so, as you get into the spring, there's more lettuce, the price goes down. But I want to point out that when I was at the store about 9 days ago, there was very, very few heads of lettuce at the stores. Next time you're out at one of these stores, definitely take a look, see how much heads of lettuce are there, because that's your early warning that something's going on. And don't forget, this is salad that we see, a head of lettuce at a store. Anybody here go out for dinner? You ask for a salad? What do you think that's going to do to the cost structure of that restaurant that's providing that salad, if they have it available? Okay. Next slide, please. This is milk. Yeah. Does anybody see something here? Our price is changing much. No. Trump has not done anything about milk. But what you can clearly see, there's a real outlier there with one store. Anybody see which store it is? Publix. Right. We only grab this on a monthly basis for a couple products, all right? But the same thing holds true when we start going to 30 different products. I don't have 30 products today, won't worry about that. But suffice it to say, what I definitely pick up is Publix and Winn-Dixie have a tendency to match up price-wise, while Target and Walmart are matching up there. And I do want to keep the eye on Publix, but I want to go in part of the research that we've done. Have to be over on a Republican website. And if you go to the next slide, this firm, or this entity, called Republican Assembly, I don't know if it's Assembly of God, but it's Assembly, okay? All right. I don't think they chose that word by accident. I don't know the background. I don't have a lot of friends over on the other team. But what these are a list of stores and corporations that they advocate for the Republican folks to buy from. Okay? You see the one that's circled here, maybe a little bit difficult in orange? Yeah. All right. What's the name of that one? Hobby Lobby. Okay. Remember about choice and options? Okay. All right. Look who else is on this thing. Over to the right. The green circle with the white P. All right. What's that? This is what Republicans are advocating to the Republican membership. Which stores to buy at. I saw this and I said, wow, should I share this with our group? Yeah. Well, they also have one of who not to buy from. Would you guys like to see that next month? Yeah. Okay, I'll bring that in. So, but the whole idea is how you can use the power of your purse or wallet to make a difference when you're out there buying. And what we're trying to do is provide information to the club membership so that you can make an informed decision and why. Okay? With that said, I would like to turn the podium over to Ash.
Can we turn the lights back on, please?
It is a great honor to be introducing our son, Nuveen Marwah, to all of you. I'm going to give you an introduction from a dad about his son. Nuveen was a bright student in school. He jumped one grade, so he graduated a year earlier at age 17. In his senior year, he was president of the National Honor Society in the school. After school, he joined Carnegie Mellon University in Pittsburgh. And there he did computer science, Spanish, international business, and finance. So he's fluent in Spanish. Also at Carnegie Mellon, he stayed one extra year and he was what they call a fifth-year scholar. So he did extra finance courses in the fifth year, but he was also teaching 2 classes. There were 60 students in each class, but it was a non-credit course, and he was teaching Texas Hold'em. When I asked him, I said, Texas Hold'em at Kadaima, he said, I'm teaching them statistics and probability. But guess what? When he applied for his first job on Wall Street, they really liked his knowledge of statistics and probability. So Deutsche Bank hired him. And since then, he has worked on Wall Street. So the last 19 years, he has been working on Wall Street, Deutsche Bank, and then Deutsche Bank sold their division to the French bank, BNP Paribas. So he worked for the French bank until he left that job to become a portfolio manager at Millennium Hedge Fund. So here he is, demystifying hedge funds.
Turn the lights back on.
Do they have any stuff?
That was the first time that I've had my dad introduce me, so that was kind of exciting. And much like a dad, I think he overstated some of my qualifications, so I do appreciate that. I didn't quite graduate with 4 degrees, but I did study in some sense all of the things that you mentioned. So when he asked me to come speak, I was trying to think of a topic that, 1, I know something about, and 2, might be relevant for all of you. So hedge funds came to mind. I think hedge funds tend to be a very secretive industry and are sometimes misunderstood or less understood. So I figured this would be a good topic for me to share about. When I was preparing my slides, I looked for a video as an introduction, talking about how a lot of financial firms, hedge funds included, have been moving from New York to Florida, oftentimes Miami or West Palm Beach. And I did find one, but because the Wi-Fi is not working, I figured I'd give you a little bit more of an anecdotal story about our family. So 3 years ago, the 5 of us moved to Miami, and my wife is working in IT, I'm in finance, and both of our jobs happened to be remote. We were flexible, and we decided to pick up and move somewhere a little bit warmer. Our 3 kids, we have 3 kids. Our oldest is 21, he's at University of Florida. Our middle is 18 years old, and he's going to Florida State in the fall. And our youngest is in the audience, Ileana, and she's 10. But I think our family is a good example of what has been happening in the past few years, particularly since COVID, with a lot of firms moving to Florida. I think that trend will continue, and I think that will end up influencing both the economy as well as the politics of the region. So, with that said, if we can move to the next slide. I think my father spoke to a few of these things, but this is my attempt to convince you that I'm actually qualified to speak about the topic. I'm currently a portfolio manager at Millennium. And like my father mentioned, I have previously worked at 2 global investment banks, BNP, and spent the majority of my time, nearly 14 years, at Deutsche Bank. Went to Carnegie Mellon University, and I'm also a CFA charter holder, which is a certification that requires a few exams. All right, moving on. So what exactly is a hedge fund? I figured I'd start with a definition and then kind of pick this apart a little bit. So this definition, courtesy of Investopedia, says it's an actively managed investment pool whose managers use a wide range of strategies, often including buying, I should add, and selling, with borrowed money and trading esoteric assets in an effort to beat average investment returns for their clients. So let's break that down a little bit. An actively managed investment pool, that means we have quite a few clients that pull their money all together, essentially put it in one giant pot, and then we hire managers, of which I am one, to actively manage that pool. So unlike, let's say, investing in the S&P 500 or the Dow Jones Industrial Average, which is a very passive strategy, you sort of just buy and hold, hedge funds are a lot more active, buying and selling based on various signals. It does involve borrowed money, so there is a decent amount of leverage, which enables a hedge fund to earn very small returns, but much like in real estate, with a little bit of leverage, can magnify those returns into something meaningful for their investors. Oftentimes, the assets are esoteric or a little bit lesser known. So rather than just being in simple stocks and bonds, there are also other categories of financial instruments that we can trade, including derivatives, foreign exchange products, and plenty of other things. The idea here is to beat average investment returns, and I think there's two parts to that. So there's two ways to beat the average investment return. One is to actually earn a return that is higher than average. I think the other way that we focus on quite a bit in the industry is potentially maybe just matching the average investment return, but with a lower volatility. So rather than making 30% one year and potentially losing 30% another year, which often happens in the broader market, the idea behind a hedge fund often is, how do we earn returns without having a very wild path along the way? We can move to the next slide. This slide kind of gives a picture of how the flows work. So a hedge fund has investors, the money goes into the fund, and then the fund looks at potential investments. And this could be anything from, as it says here, a real estate project, a startup. It could just be a public company stock like Pepsi or Southwest. We can invest in commodities like gold or even Bitcoin. And then there are also fixed income products like government bonds. That's just a subset of potential investments, but you can see that, okay, the money goes into the hedge fund, the money that is then invested into potential investments. Now, how does the performance work? Most of the performance is given back to the investor, but the way the hedge fund earns money is by keeping a certain percentage. So the hedge fund will keep potentially 20% of the returns, and in addition, 2% of the total assets invested. And that 2% of the assets is intended to fund the operations of the hedge fund. So if you need to have HR personnel, investment personnel, technology, all of those items are funded by the management fee. And then the idea behind the performance fee is oftentimes to attract the best talent. You can keep some of the returns and essentially reward employees with that additional money. Moving on. So who can invest in a hedge fund? On the left-hand side, we see an image of essentially what type of individual investor can invest. And this is typically an accredited investor. An accredited investor is typically defined as someone who has a personal net worth of $1 million or more, or personal income of $200,000 annually. That's been a static number for a very long time, so I think when it was first introduced, that was a fairly exorbitant amount of money. Now it's just a very high amount of money. Oftentimes, in addition to individual investors, hedge fund investors tend to be institutional. So on the right, you can see that public pension funds, sovereign wealth funds, and private sector pension funds are some of the biggest investors in hedge funds. Can I actually just get a quick show of hands? Do we have anyone in the audience who's willing to admit or reveal that they receive any money from public or private pensions. We do have, okay, so that was a little bit more than I thought it was going to be, but that's good because this kind of gives you a sense of, all right, part of the money that you're earning is actually coming from investments in hedge funds themselves. Moving on to the next slide. So how much of it is exactly coming from hedge funds? So if you look at the asset allocation, and this might be difficult to see, so I'll sort of, I'll describe it a little bit. This is public pension funds, and they tend to allocate roughly 5 to 6% of their assets to hedge funds. And as you can maybe see, that has been growing over time. The vast majority of assets are invested in fixed income, public equities first, so stocks, fixed income instruments, and then there are some alternatives like real estate, hedge funds, private equity, commodities, and other alternatives. So I think a good rule of thumb here is to say that you can expect that 5 to 6% of pension fund assets, at least public pension funds, are invested in hedge fund investments. So this slide compares hedge fund investments to mutual funds. And I think this is a good way to look at it because I think mutual funds are a little bit better understood. A mutual fund tends to be long only, meaning a mutual fund will buy stocks or buy fixed income products like bonds. So they're subject to bull markets and bear markets. When the market's up, they do well. When the market's down, they do poorly. They tend to be available to the general public. You can trade them every day that the stock market is open, and you tend to know what the fees are. They tend to be somewhere between 0.25% to 1.5%. Whereas on the left-hand side is a description of hedge funds. Again, the idea here is that whether the broad market is up or down, the hedge fund's goal is to make money in all types of environments. Unfortunately, they tend to be only available to large investors. There's limited windows of opportunity to invest or to withdraw. And the fees, as I mentioned earlier, can be much higher. So you pay very high management fees, and then on top of that, there's a performance fee charged as well. So what types of strategies are employed by hedge funds? This chart sort of shows that almost half are equity strategies. So that's strategies related to stocks. I think one of the biggest strategies is fundamental equity. So this is what I think probably what you think of traditionally as research analysts really looking into public companies, understanding how their business models work, looking into their financials, where are their revenues coming from, what is their growth opportunity, and trying to determine which companies are the next best thing. In addition to that, there's also credit strategies, which are related to bonds and derivatives of bonds. Event-driven strategies, so mergers and acquisitions are a good example of event-driven strategies. If, let's say, Publix, which was mentioned earlier, perhaps it's targeting an acquisition of another grocery. If that's happening, then a hedge fund might evaluate the likelihood of that acquisition closing and make investments in the target and maybe short the acquirer, Publix. In addition to that, there are other strategies like macro strategies that deal with the broader economy. I think a lot of what Bill was talking about earlier with inflation. And I think the one thing I want to note here is that 8% chunk there is something called multi-strategy. So multi-strategy is a type of hedge fund that employs all of these strategies in some form with the idea of combining them to produce better risk-adjusted returns. Moving on. Go a little bit deeper into multi-strategy. So multi-strategy can involve macro, equity, commodities, credit, event-driven strategies. And the benefits are kind of shown on the right. So one is diversification. The idea is if one strategy tends to be performing well in one market environment, it might tend to perform poorly in another. If you have all of those strategies employed at the same time within the same firm, it sort of smooths out returns. So you can expect more consistent returns, maybe lower returns, but more consistent returns over the long run. In addition to that, a multi-strategy firm can get economies of scale. So a lot of functions of a hedge fund can be shared across different strategies. For example, HR, technology, back office support. A lot of these functions, if they can be grown large enough, can essentially support a larger range of strategies in a more efficient way. So multi-strategies have sort of taken off recently, taking advantage of that business model. This slide just kind of gives a quick snapshot of some of the largest hedge funds. So Bridgewater is a large macro hedge fund focused on tracking large macroeconomic opportunities. Renaissance, AQR, and Two Sigma are some of the biggest quantitative strategy funds. And then you can see there Millennium, that's the firm that I work for, is one of the largest multi-strategy firms. Right next to it is Citadel. The Citadel, I think, is particularly interesting for this state because its founder, Ken Griffin, formerly had Citadel and Citadel Securities, two of his firms located in Chicago. They have since relocated their headquarters to Miami, and perhaps you're familiar, he's becoming more and more involved in state as well as national politics. So I think you'll see more influence from him over the next few years. And then a few more hedge funds there: Tiger, Global, D.E. Shaw, and Coatue. So the question is, why should you care, right? Why do we care what's happening? And I think one is how the state's landscape is changing. Both the economy as well as the politics, I think, will get more influence from hedge funds and financial firms in general as we see a bit of a shift from New York to Miami, West Palm Beach, and other parts of Florida. But also, I think from my perspective, I think it's also just intellectually interesting. The industry is, like many others, being influenced quite a bit by AI. More and more, a lot of these strategies, rather than being developed entirely by analysts, I think what we're seeing is a lot more help from AI tools like machine learning, trying to look at large swaths of financial data and identify patterns and create strategies that potentially make money without even really understanding fully why. Machine learning kind of helps analysts identify patterns almost in a black box. Additionally, if you look back to Liberation Day, quote unquote Liberation Day on April 2nd, I think we had quite a bit of hedge funds get hurt a little bit financially during that time period with the tariff announcements. You also see short selling in the news a decent amount. So there's a headline there about short sellers profiting from Tesla's collapse over the recent months this year. The one thing I would say about short selling is it's actually one of the good things about our financial system, about our stock market. Short sellers actually help keep prices in line, so that as retail investors, when we go to invest, there's actually some sort of cap on how much we're paying to invest in certain securities. So to some extent, hedge funds and other financial firms that are capable of short selling keep markets efficient, reasonably efficient, and make our financial markets more investable or for us as retail investors. And then last, hedge fund herding tends to be a topic. So as hedge funds have grown over time, oftentimes you have hedge funds that are competitors that are often doing similar things. When hedge funds are doing similar things, they're carrying similar risks, then when things go wrong, if they need to liquidate, sometimes those liquidations happen at the same time. When that happens, you can end up seeing moves in the financial market that will impact things like your 401ks and your pensions directly, and that might be caused by the herding that's happening in the hedge fund industry. Interestingly enough, the regulation that came out of the financial crisis in 2008 moved a lot of the risk-taking from the banks to the hedge fund industry. So it kind of fixed some problems in the sense that rather than having that herding and crowding behavior within banks creating a systemic risk, I think to some extent we're now seeing some of that systemic risk show up in the hedge fund industry. These are just the sources from which I stole all of those beautiful graphics. I figured I'd give credit where credit is due. And if we just move on to the last slide, this is a quick overview. This is showing from 1990 to 2024 the growth in the hedge fund industry. The yellow line there is showing the number of funds, which is sort of plateaued at around 8,000. And the estimated assets has continued to grow. And we do expect that assets will continue to grow, maybe not at the same pace as they have in the past 35 years, but maybe at a 4 to 5% annual growth rate from here. So I think they'll continue to be relevant in general, but particularly as more of the activity moves from New York to Florida. But I wanted to stop there and maybe give as much time as possible to any Q&A. So if anyone has any questions, I can't promise I will have the answers, but I will do my best.
Thanks for the presentation. What is a carried interest and what is the theoretical justification for its treatment?
So carried interest, to be honest, I don't understand it as well as I should to be able to answer that question. But essentially the idea is that a portion of returns from investments go to the managers as capital gains rather than income. And so I think obviously it's a hotly debated topic, and it's one of the tax advantaged benefits of owning a hedge fund firm. Now, just to give you an idea, as an employee of a hedge fund, I don't benefit from that sort of tax loophole. It tends to be private equity founders and private equity owners that make long-term investments in in firms that tend to benefit.
Surprise.
Yeah. Questions?
Could you explain Bitcoin?
I don't think we have enough time for that. I think in a very short way, Bitcoin is it's cryptography. It's a computer science theory applied to real life. The idea is that with the combination of a public key and a private key, essentially a public key and a password, you should be able to transfer a Bitcoin or a portion of a Bitcoin between people. And I think a few of the things that make it particularly attractive or have made it particularly attractive is one, that it's decentralized. There's no bank or independent third party that needs to verify, or a single independent third party that needs to verify that a transaction has taken place. The key is that it goes onto a public ledger, which multiple people can verify using cryptography. And essentially it gives you a decentralized way to transfer value. How did I do it?
Our money is supposedly backed by gold. Bitcoin, so Bitcoin, where does it get its value?
So I think you hit the nail on the head a little bit. Our money is no longer backed by gold, so it's fiat. It's backed by the full faith and credit of the U.S. government and our ability to tax. And Bitcoin, in much the same way, is backed by investors' faith in its staying power.
Hey, good morning. My name's Amanda. Thanks for coming to talk to us. I want to kind of bring it back around to being a Democrat in Florida. I find it interesting that these hedge funds are moving to Florida after having Republican leadership in this state for so many years. Not being an expert in finance, have to imagine that there's some regulatory oversight, law kinds of stuff that make it favorable. And we're seeing a lot of money put into not just federal politics, but state and local. You as an employee of a large hedge fund, what's the conversation of you being, here in Florida, and is it all about making money, or is there any kind of discussion of the politics or the backing that we're seeing, sort of this oligarch shift to big money in politics? I'm just kind of curious, and you're in a safe space here, you know, you're here with your dad. Yeah, so I guess I'm curious on your personal opinion and thoughts of just what this kind of means to the state of Florida regarding the kind of money and investment and influence that your firms and others have here.
Yeah, I think that's a very relevant question. I think what is attracting companies to Florida, I actually don't think it's a regulatory reason, because a lot of the regulation that hedge funds are subject to are at the kind of national, federal level. So I think it's a combination of, I think one big one is that since COVID, I think the ability to engage in investment activity remotely has been expanded. That said, financial firms are actually opening up new office buildings in Florida. So I think another one of the attractions is actually, as employees, the lack of state taxes. So if you're earning large salaries, the impact of going from let's say if you live in Manhattan, your marginal state and local tax on your income is, I think, almost 15% now. So that's a big uplift for employees that are moving here. If you look at Citadel, I mentioned Citadel and Citadel Securities, and Ken Griffin, as a founder, he was in Chicago for a very long time, but he had issues with the local politics in Chicago. And that combined with his ability to basically rent out the entire hotel during the depth of COVID in Florida sort of opened up his eyes to the possibility of being able to move here. What is the conversation like? I think it's interesting because the founders of these firms are in a much different situation than the employees of these firms. The employees are doing well, but the founders tend to be billionaires. So I think there's quite a wide variety of politics and views within each firm. And my colleagues are made up of probably a pretty healthy split of Democrats and Republicans, much like the rest of this country. So I think you probably have a lot of people working for firms that don't necessarily agree with the founders' principles, but sometimes a job is a job.
Yeah, sure.
Thank you. You had a nice slide up there comparing hedge funds to mutual funds. Sorry, is that wrong? One of the things you didn't touch on, I guess, was leverage and margin rates, which I think, if I understand correctly, hedge funds have a much lower requirement. I'm magnetic. Hold it away a little. So,
Sprinkle and go on there.
is that better? Yeah. So I guess I wonder if you could just talk briefly about how hedge funds manage the risk of having much lower margin requirements than many of the rest of the investors. And whether this, you talked also about 2008 and how your requirements for managing some of the risk shifted more to the hedge funds there. So does that put us, I don't know, the country as a whole at greater risk?
I think it's a bit of a combination. So banks were over-levered during the financial crisis, and that was clearly one of the problems that contributed to it. Hedge funds actually get their leverage via banks and broker-dealers, and those banks and broker-dealers are now better regulated since the crisis. So I would like to think that while they're getting favorable margin rates from those banks, the banks are actually well capitalized enough to handle if and when hedge fund firms go under. So there have been multiple, I would say, large hedge fund failures in the past few years, and that's the normal part of any industry, right? Companies go bankrupt, and the idea is that we shouldn't have so much systemic risk in the industry that it causes a contagion, a problem in other firms in the same industry, or worse, other firms in other industries. And so far, that has been largely contained. So I think that's a reasonable indication that the banks are actually, while they're providing leverage, they're doing it in a way that enables them to make margin calls and kind of reshore their capital before they get into any issues. Now, I think the problem with these types of things is the distribution matters. Like maybe in 99% of situations we're totally fine, but I think what I see as the primary major risk to consider is the crowding risk, the herding behavior. So if you have a lot of hedge funds doing a lot of the same things, and the size of those trades becomes very big, if one issue with one hedge fund creates a margin call that they cannot meet, that firm goes under. But the problem is if that happens with multiple firms at the same time, what are the potential impacts there? Now, interestingly enough, you actually have some of these hedge fund founders highlighting that from time to time in speeches that is a potential risk. So they're acknowledging it as a potential risk systemically. What to do about it, I think that's a more difficult question. I think that the best thing is to have the firms, the banks that are providing the leverage, be well capitalized enough to support that sort of event. And I think over the rest of this year, we are going to see some of that deregulation from the administration in the financial industry.
Thank you so much for your presentation and your daughters being delightful. My question is, the first year of hedge funds in existence, most of them make it. At the 5-year mark, you're looking at about 60-something%, which means 30-something don't make it. And you see the government now, and in your speech you did a great job of explaining how hedge funds took over many of the investment group pooling things that you saw banks do previously. And we all are of that demographic age-wise here to remember what happened to the banks a couple years back in the government bailouts. And the government now has amassed about a $2 trillion bailout fund if that cascade you talked about in the last question begins to occur. So my question is, what is the industry hedge fund doing to self-regulate the prevention of needing those bailout funds? And what can we as Democrats and pension fund folks do to advocate for the regulatory oversight to prevent the need for the bailout funds?
Good question.
I think, that's a difficult question. I think the biggest thing is self-preservation, right? As a hedge fund, as a portfolio manager within a hedge fund, my main concern on a daily basis is how do I survive to make sure I'm here the next day? And so I think a lot of that self-regulation comes from the idea that risk management is a very core, central thing that we need to do in our daily lives. Obviously, at a firm level, they're doing the same thing, looking at the risk at the firm level to ensure survival. So I think just naturally, as in any other industry, free market will dictate that each company will look out for their own interest, and that's kind of the first line of defense. I think the second line is all the regulatory organizations that we have, like the CFTC, the SEC, and then all of the bank capital regulation requirements. And I think that the idea is that between the combination of those two things, that should be what is protecting us. Now, there's a bit of a trade-off, right? Because the tighter the capital regulations are, the less lending activity, and it's almost a constraint on the economy. Now, I think we all acknowledge that there needs to be some level of that constraint so that we don't go through massive booms and busts that are created by credit crises. I think where we disagree is what is the right level? And so I think that's the conversation that you need to be involved in. Finding people that you trust to make policy to find the right level, because that's going to be the biggest debate on the national level, I think.
All right, do we have time for two more questions?
Hi, thank you very much. I'm very interested in the diversity and your strategy, and I know you must file with the SEC. Would I be able to view this online, the holdings that your hedge fund would have?
So there is a requirement that all hedge funds disclose their holdings. I think it is called 13F filings. So on a quarterly basis, you can see holdings in, I think what would be most relevant is in stocks. It's not the most helpful, I would say, because there's a lot of other ways to hold risk, not just in the stocks themselves, but in financial derivatives. So it doesn't give you a full picture of what's going on, but it does give you some. And actually, some of the funds that I mentioned, like the fundamental equity funds, I think some of them have very small number of positions. So I think if you wanted to look at one that might be interesting, maybe Elliott, I think. Elliott or, let's go with that one. We'll pick one example. So if you look up 13F filings for Elliott Management, you'll be able to see basically a small number of stocks that they are bullish on.
Thank you.
Last question.
No, that's okay.
All right, take some time for one more question.
Behind you.
The father one.
In front of you.
The father.
This better be a softball.
Ken Griffin of Citadel, he is paying money to change laws in Florida. You know more about it?
That was not a softball. I don't know more about it, but it does seem that way. So one of the laws that's going through, I think maybe has gone through and been signed, is a non-compete bill. I think that extended the ability of employers to enforce non-competes for up to 4 years. And I think there's some constraints on it. So you have to be earning more than twice the median salary in your local area for it to be subject to this. But I think that, I don't know for sure that that's being lobbied by Citadel, but it sounds like something that they would want, because one thing that is common in our industry is very large, very long non-competes. So these are agreements that prevent you from working at another firm for 6 months, 1 year. I've heard up to 2 years. This is now extending that possibility to 4 years, with the idea being that founders don't want their intellectual property, their IP, to be taken from their firm and employed elsewhere. 4 years is a very long time, but it seems like something that he would want in order to protect his firm. So, look, I think this is part of the reality of where we are, and probably something that would be worthwhile for a group like yours to be paying attention to. Thank you very much for inviting me. I appreciate it. I don't get the opportunity to speak very often. We tend to be a very secretive industry, so it was nice to be able to have the opportunity. I appreciate it.
Very interesting conversation, dialogue, the questions and answers. My wife worked for 10 years plus in North Carolina as a school nurse, so she was living at an interesting intersection. But the point is that she does receive a pension from the state, and it's up to the state to be able to make sure that they have the funds necessary to meet the future liabilities that are commitments that the state has made to the retired employees. Roughly 14% of the United States workforce works in the government sector. Not federal, but in county and state. This is a really important topic. So let's say that the club here we have different speakers that come in. And let's say, hypothetically, we have a speaker that comes in who might be running for governor. These might be some very good questions to ask them. Okay. Has anybody heard of the concept called unfunded liabilities? Yeah, that means there's not enough money in the cookie jar to pay all the retired employees. All right? That's an interesting conversation to have with the governor. What do you spend the money on? You have this commitment to fund your retired employees, and you want to build bridges and do different things within your state. So you want to know, if you're the governor, are there unfunded liabilities? Just hypothetically, if you did get somebody running for governor who comes in to speak, these might be some interesting questions. I tell you, there was a lot of interesting questions that came up, and it totally amazes me of the membership that we have here and the intellectual horsepower, okay? And it's one of the reasons why we're doing this survey of all the members to get your backgrounds and areas of interest. I will have these forms, because that way we can get you matched up with other people who have similar interests, as well as different skill sets in campaign work or helping out. So we can pitch in, so we can specifically get folks with backgrounds that are of interest. And that's what we know about, or how we can all pitch in cumulatively to become a much better organization club. So I have these forms, I have them out here. It takes about 3 minutes after the meeting. If you can complete it, it'd be greatly appreciated. With that said, we have Amy Shaw, who's going to be talking about her conversation. I'll let her do the intro on it, but she brought up the conversation that she had with an international person dealing with going through a country that entered into fascism. And Amy, even though she's not wearing a green vest, because we only have 3 of them, she's on our board here. And the reason the green, so you can spot us in the crowd and say, hey, let me talk to you about what's going on up above or wherever, what's going on in the club. So anyway, here's Amy.
As I adjust this for being short, can you all hear me?
Yes.
Okay, great. So, a member of the club was approached by a woman who had the experience of her native country, Venezuela, falling into fascism under Hugo Chavez. And she really wanted to get information out to our club, and probably other people as well, about what that was like and the parallels that she's seeing here. I invited her to come speak to the club, but for reasons that should probably be obvious, she was nervous to come out publicly with this information, but she asked me to relay it to you. So it's not my first person account, but it is a first person account. Could I get the lights turned up a little bit? I don't have slides, but I have paper. Thank you.
Is that bright enough?
Oh, it's great. So here I am. Okay, so the main thing that she wanted us to realize is that she sees the exact same playbook being used here as was used in Venezuela under Chavez. She thinks it comes from Putin wanting to kill democracy. And she might be right. She says she doesn't see any difference between what happened in Venezuela and what's happening here now. The same chaos, attacking universities, attacking other countries, etc. And she points out that what Trump had planned to do is in fact happening. So the first thing she talked to me about was the chaos. She said people got so overwhelmed with so much that was going on that they forgot the first things that happened. Sound familiar to anybody? She said people forget because new things are constantly coming in. All the criticism that people are hearing against Trump here was the same thing that they were hearing against Chavez, but that dictatorship never ended. She says if we think things will go okay, we'll still end up with dictatorship. And while all these distractions are happening, the dictatorship is just rolling along and becoming more entrenched. She said the first thing that they did in Venezuela was controlling the press and controlling the news. So the first thing he did was attack TV stations by telling them that they would fine people, fire them, sue them, whatever, or fines to impose if they don't come into line with the liberal party line. So as a result of that, they were able to make the owners of the media sell to them, and then it was state news, state media, and so it was very easy to get that information out and nothing else. So the people who watched the government stations, of course, got brainwashed because that was the only source of news that they had, kind of like our Fox viewers. In terms of education, so Chavez started going into the schools to change the curriculum to brainwash the children, to be against democracy and pro-dictatorship. Sounds familiar? Yeah. We're seeing that really strongly here and across the country as well. So they also had billionaires involved in their descent into fascism. At first, the billionaires supported Chavez until he started hurting them economically. He took over a lot of companies and farms from billionaires, but didn't know how to run them. So as a result, the country became hungry, and people started worrying about where their next meal was coming from than what their government looked like. He also said that people's standard of living went down. People couldn't travel because the currency had been devalued, so they were essentially trapped in the country. They started seeing suspicious suicides of people who were against the regime. And then, of course, once he became the dictator, he didn't need the billionaires anymore. Kind of like, Musk is out because he served his purpose, and so forth. So she talked about the resistance that they were putting up in Venezuela. She said people were on the streets every day, that the regime had armed groups that were going in, causing chaos and making the protests turn violent. What they did do was, and she said this was a very effective strategy, they started having national strikes. People just stayed home. Didn't stimulate the economy, didn't do anything, just stayed home. And so the country was basically closed. Everything stopped in the country. So it was a very effective way of getting their attention. The other plus was that if people weren't out at the demonstrations and were inside just refusing to participate, no one was getting hurt by the violent people that the regime had out there. So they did it 2 or 3 times and Chavez resigned. Then a new government took over, but people thought that it was too aggressive. So basically, they ended up bringing Chavez back in. Right? So the dictatorship was total in Venezuela. They only held elections to pretend to be a democratic country. Like Chavez, Trump is putting criminals into positions because he knows that these people will be loyal to him. She said that both of them are nobodies alone, but they're only where they are because of their supporters. Chavez disbanded Congress and put his friends in who did what he wanted. We haven't seen the disbandment of Congress yet, but it's not outside of the realm of the playbook. When Chavez died, his successor took over rather than having elections like a real democratic country would do. So the takeaways that she gave me was Congress doesn't want to impeach Trump, so he keeps power. This is the reason the 2026 election is going to be really, really important to try to turn that over. She says, Congress are the people we need to pressure, force them to uphold the Constitution. Goodness knows the Supreme Court doesn't seem to be doing that. There's no loyalty to anyone on Trump's part, and those who are loyal to him are only loyal because they're scared. And she says, if we don't protect our country and our democracy, we'll see the same thing happen here. So, on that cheery note, I'm going to switch gears for just a minute because we've been talking about actions and actions that people can take in the demonstration that's coming up on Thursday. I became aware, and I have some bad news for you. I know we've all seen the alligator Alcatraz, alligator Auschwitz, whatever you want to call it, that's been put up in the Everglades. And we've seen the horrid pictures of Trump, Noem, and DeSantis standing there in front of the cages and laughing about how if people try to leave, they'll get eaten by alligators. Yeah, so they've decided to put up another one. So they're going to put one up in the northern part of the state, at a place called Camp Blanding, which is currently a National Guard training center. There's a group. Camp Blanding is between Jacksonville and Gainesville. That's the area of the state it's in. And I checked Waze, and it's about a 2 to 2.5 hour drive, depending on how you go. I live south of the villages, it might be 20 minutes shorter, somebody north. There's a group called the Jacksonville Immigrants' Rights and Alliance, and they're holding a press conference on Friday to bring this to people's attention. And then on Saturday, they're having a demonstration. And, anybody who can come is welcome to. I got in touch with them to get some more specific answers as to what's going on. The center is expected to house about 2,000 detainees, and it's expected to cost about as much as alligator Alcatraz, so there goes our tax money. As you know, the state legislators were denied access for oversight into the Everglades facility, and they've now sued. So, in the Everglades facility, there have been reports of horrific conditions. You guys have probably seen a lot of it. Yes. Lights aren't turned off, the heat's oppressive, the food has maggots in them, they're not allowed, basic standards of cleanliness or anything. So, my thought is one of these is bad enough, we don't need another one. Right. So, I did, like I said, I got in touch with the people with the Alliance, and they said so it's this Saturday, July 19th at 3 p.m. that they're going to be holding this demonstration in Stark with an E on the end. They said, come prepared for heat if you're coming. There's little shade. It's on the side of the state highway, so there aren't any sidewalks. Parking is along the highway, and I've been assured that there are going to be safety marshals in bright yellow vests, like our people here. And I've also been assured that they have a police liaison who's making law enforcement aware of what's going on and so forth. So if anybody, I'm planning to go. My husband's planning on being dragged along too. But if you're interested, get in touch with me or whatever. I'm not sponsoring it, but I just wanted to bring it to people's attention. Now, a little bit lighter note for Thursday and for Saturday and for anything else going on in the midst of the summer heat in Florida and how little shade we have. Bill is the sign guy, so I'm the umbrella person. So you can do this with markers and a cheap umbrella, and then you have your sign and your shade all at once. So, that's what.
Quick conclusion, I wanted to mention about when we were trying to get the speakers, how to mix, how do we mix and match here? And so we talked about finances. And then I also noticed that Ash, his son, and myself all went to the same university called Carnegie Mellon. Okay, it's a small school in Pittsburgh. All right, and what the real tie-in is what's going on with Venezuela and the international, because the number of students at Carnegie Mellon is the second, international students, it's the university with the second largest concentration of international students. So when you hear about Harvard with their 20%, Mellon's coming in at about 40. Wow. Okay? So when you hear about ICE, all right, this is personal. Okay? So with that, I just want to say a reminder in your lanyard, this is how you can be involved on Thursday with the sign rally here in the Villages. Once again, it's over at 10 o'clock on Thursday, over on Morris at Lake Sumter Landing. I just want to say a reminder in your lanyard, this is how you can be involved on Thursday with the sign rally here in the Villages. Once again, it's over at 10 o'clock on Thursday, over on Morris at Lake Sumter Landing. And then finally, a quick reminder, if you can complete the survey of skill set, background, areas of interest, that way we can get you matched up with the right people and we can work as a team. Thank you so very much for the investment.